All right. Cisco stock 52 half-ish. Expected move is right about $2.30 to $2.40. Okay, so we got an expected range then. Just gonna round this off. 50 up to 55. Okay, so we look at 50 up to 55. And you definitely have some resistance up here at the 50-day. Downside, I really see no support at all until this point right here, which is about 49, which was the two resistance areas here. So, see you later, Kim. So I see some support at 49, definitely some resistance at 54. Pretty bearish looking chart here. I was reading some of the info going into earnings here, and the street seems to be pretty dismal. Looking at what I see here, it looks like there's a lot of these analysts think they're going to have really, really good numbers. However, like anything else right now, especially related to China, it's the guidance. Nope, let's take a look. Okay, so if we were to just look at an iron condor, good morning, Rob. How are you? We can see this iron condor here. Juan, you mean you bought it, right? Because the original signal was to sell a put spread. Okay, this iron condor is interesting if you could get 45 cents. Especially if, like I am, we're in a slightly bearish outlook here. Because it gives us some room here. It gives us a little bit of extra room to the downside. It does cut the upside, but we're looking to cut that. This is interesting for a stock that doesn't move a lot. Ah, Juan, there you go. Not even sure how you bought it for 35. Because we couldn't even sell it at 40. But good. So this is interesting here. I also want to look at, see what volatility is doing on the put side here for a potential put calendar. Paul, I can. I'd have to fumble around with the Analyze tab. I'd much rather wait until our webinar next Tuesday with Thinkorswim to show us how to do it really properly. Tony, my answer to that would be, honestly, my standard answers, that we don't go into any signal without the foresight and without the thought process that it's a high probability setup. Otherwise, we're just not going to do it. Finley, we'll give you guys all the information. We'll give you guys all the information. Well, Paul, I can go over how to put the order in. It's in terms of adjusting the volatilities. That's where my struggle comes in. But if you want, I can certainly show you how to do the put calendar. I mean, from an order entry standpoint, that's easy. It's really no different, Paul, than doing a call calendar, but I'll be glad to show you here. So go right to calendar, okay, and you select the expirations you want. So right now we've got the 17th, 24th right here, and if we're looking at the 50, just click on it. There you go. There's the 50 strike put calendar. Now I'm actually looking at a put diagonal. If you know how to do the call side of it, Paul, then there's no difference in doing the put side.
So, what do you need from Kate and I for this?
Oh, I'll come over to. Let me finish this recording.
Oh, sorry.
Yeah, it's okay. All good. All good. All right. So I was looking at a diagonal. I'm now looking at a put spread for next week here, and this is pretty cheap. This 51.49 of next week. Let's see what happens if we adjust this to the 51.5, 49.5. I really like this diagonal the best here, guys. The diagonal of selling this week's 50 put, which is right at the expected move, and buying next week's 51 put. Okay, this thing's going to cost right about 40 cents or so. I like it. And what I would do, there's a negative 16 delta to this. So I'm going to put out a 35-cent bid for this, guys, for right now. Now, you can see there's no chance we can get filled 35 cents, right? Because it's already 36-cent bid in the open market. So if I'm thinking that we potentially have the opportunity to get filled at 35 cents, what has to happen to the stock? Bingo. So when I put this out, guys, we would be looking to enter into this thing as the stock goes a little bit higher. Okay, and if the stock doesn't move higher, if it does not move higher, then either we'll adjust or look for something else. Okay. Any questions there, folks? See you, Jake. Okay, so I'm going to put this signal out here. One last question here that we can go over. So 16 delta, okay? What do you think I should put as a limit in the stock in order for this to be valid? What do you think? Where would this potentially be fillable at 35 cents with the stock trading about where? Anybody? Yeah, about 52.85 to 52.90 or so. Okay, so we need to get roughly, let's call it a nickel. Okay, we need the value of the spread to come down about a nickel. Probably a little less than that, but about a nickel. Okay. Well, on a 16 delta, that's about a third of the move, or about a 33-cent move. In the stock. So if the stock goes up about 33 cents, somewhere in that range, the value of this trade should come down about a nickel. Does that make sense? So what I'm going to do in our signal then is this will be valid with the stock trading 52.90 or lower. I could probably make it 52.80, but we'll give it a little bit of room. Okay, Rob, let's do that. Okay, so let me put up on the board here, on the whiteboard, the May 17th, 50, May 24th, 51 put diagonal is currently trading, let's call it 39 cents. okay, with the stock equals 52.60. Okay, stock's gone up a little since we started. And a delta of negative 15. Okay, so here's the 52.60. Here's the delta of negative 15. Okay? So, if we want to buy at 35 cents, which is 4 cents lower than where it's trading right now at 39, where does the stock need to be? Well, the delta tells us that the value of this spread is going to move 15 cents for every dollar that the stock moves. Okay? We're looking to pick up about 4 cents. Rob, are you with me? So if we take the 4 cents we need to pick up divided by the delta, that equals about 0.27. So we would really need the stock to be trading about 27 cents higher or so for the value of this to come down to our level. Right in that area. Okay? Does that help everybody out? You're very welcome. Thanks for asking. Okay, let me finish up the video here and get this signal out. And we'll get this rolling. I have not yet, Tony. It's coming out as soon as we finish here. And there it is as we speak. All right.